Michael, how has COVID been for the last year for you, on a personal level first?
Thanks, Chris. This year has been an unprecedented series of events. Last year, in the middle of COVID, we ended up moving to the Gold Coast for about 4 months. And that was an interesting period where half of our team actually ended up living down there on various ways. And from there, we worked remotely. We were on Zoom meetings with clients, we were there taking the calls and helping to give our clients confidence about the market and what the next steps would be for them to ensure their wealth. And it was fascinating. The kids loved it. We learned to surf, we were in wetsuits throughout the winter. And then suddenly when school came back in around July for us, we then moved back to Brisbane and then sort of decided then to get back into fitness, get back into work and then return back to the office. And that's been really good to see, all of our staff back in person and back with us together.
And we've moved offices in the last month as well. We've gone and moved to a new facility at WeWork. How's that been for you?
You're right. So we've moved office in the last month or so, and that's been really good for the team to be able to find a more modern space to work from. It's just across from our previous office on Adelaide Street and across into Queen Street, and where the old Westpac Bank building was. And across there we've moved into some more modern offices that are a lot larger in terms of the space, and they actually give us more freedom to move around. It's one of the new modern shared workspaces. They give us private offices for us, and then there's a lot more meeting rooms and boardrooms that we can access and different conference facilities. They give us a bit more space to expand the team and make sure that we don't step on each other's toes as we're...
Yeah, I think the team has definitely enjoyed having a little bit more space, a little bit more freedom, having the ability to go and work in little areas and pockets around the office and stuff. I've definitely seen some smiles and happiness going on, and I think with everyone, some working from Gold Coast, some working from Brisbane, and in this new world, I think it's fantastic that we're able to do that.
Yeah, and I think you're really correct there in the way that moving to more modern spaces allows us to feel the team dynamically go up and down in terms of the new paradigm of remote working. And that's something that we're going to have to live with permanently in the new post-COVID era. One of the fund managers commented that it was basically like we've travelled forward in time 10 years in a single year. In terms of we now have remote telehealth meetings, we now have meetings with our doctors, lawyers, financial planners on web cameras, and even with our 80, 90-year-old grandmother clients. They're now on Zoom talking to us back and forward saying, sure, they're using DocuSign, they're executing things remotely. The world's changed and it's not ever going to move back to where it was 10 years ago. I think we can be all proud and excited about what that means for the future and the amazing investment opportunities that exist in taking part of that future investments as well.
Yeah, I think it's definitely been interesting to see some of the video chats and everyone's at least embracing it. They've had to. And I think it's stemmed from everyone having to do their families over Zoom, FaceTime, things like that, that then the older generation has been able to then, I guess, embrace it, and they really are. They're giving it a good crack with us anyway.
When I think about what the future is to the way work, living and family work together, it's about trying to reduce friction.
Yeah. And
sometimes friction can be the travel time, sometimes it can be technology, sometimes it can just simply be parking. And in using, I guess, a hybrid where we can do some of the work remotely, some of the work in person, and then making sure that when the human touch is there, we're there to focus on what your needs, goals and dreams are, and we can do that more when we're face to face. But if there's some compliance work and some paperwork that needs doing, then we can do that remotely and get that out of the way. It really allows in-person relationships to take hold and be made precious again.
In Brisbane City, it doesn't feel like it's back to capacity yet. It's driving into work, it's amazing to see. There's a lot of cars coming into the city at the moment, but then when you actually get into the city, it still seems a little bit quiet still. I don't think the big corporates are back in the buildings still and still doing a lot of work from home. So I think it'll be interesting to see how the next 6 months pans out.
So interestingly, say the way that Australia is returning back to capacity, particularly Brisbane itself. Brisbane is a home of transit people flying to Sydney and Melbourne on a regular basis. And I know certainly for me, where I was previously perhaps flying to Sydney and Melbourne maybe once a week, that's now been a year and a little bit of now no travel down to Sydney and Melbourne. Where I think perhaps though that'll change is now looking at what Qantas is saying is they're returning to about 90% of pre-COVID capacity. And they're forecasting that they'll be above pre-COVID in flight numbers within about 6 months. So the Australians have decided that we're going to finish with this Zoom thing for now, for a little bit, jump back on the planes and go and see our loved ones and go back to work. And enough of the sense of digital's great, but it'd be great to see people. We can't hug yet via Zoom. So I'm enjoying the idea that we get to go back to normal.
On a personal note, I guess it's been an interesting last 12 months for myself. We had my second child, Max, in May last year. That was an interesting time, whether or not we were able to go to the hospital, whether or not, one or two people could. It was an interesting time at that point. Going and working from home has been a bit of a challenge. At first, having a 4-year-old and a 1-year-old, they were kind of accepting when Dad was around all the time. They would allow him to sort of work in his own little office and have no problems. This whole new bit of actually, partially working from home and partially working from the office can work for some, and it gives good flexibility, but for me it's actually been even more of a challenge because the little kids don't necessarily get that Daddy sometimes works at home and that Daddy sometimes works in the city. So it's been a bit of a challenge on that level, because I guess it's while it's good to be home and experience your child growing up and hearing his first laugh and doing all those wonderful little things, when it comes down to it, kids don't necessarily understand. I think Chelsea, she was 3 at the time actually, and her experience India on the phone, on the Zoom all the time, and every afternoon they would do a little bit of drawing and have a bit of a chat. I thought the moment that they actually then met after about 6 months, the connection was still there. I thought it was amazing to actually see that doing Zoom, while it's fantastic to, that we could be so separated, but actually when we did get together, the connection immediately hit again. And I think that'll happen with clients as well, where, we've had this time apart, but I think going forward, once we get back together, I think it'll just connect again. It'll make us even stronger, I think.
I like what you're saying there. The idea that we can be stronger after that period that's been stressful globally to go through COVID. And now what we're seeing is the resurgence of the economy afterwards. We're seeing the housing market, the share market, the employment market, everything's rallying back. And a lot of that is based on the demand for services, and the demand has been put on hold. There's been a couple of $1 trillion globally go into the economy in the last 6 months. And trillion sounds like a big number because it is a really big number. That money though has ended up in the hands of businesses, in the hands of shareholders, in the hands of our clients, and to mums, dads, pensioners, and it's waiting to be spent. Its desire is to end up ultimately in the hands of business owners who are doing service-based jobs and helping people enjoy experiences and similar. And what we seek to do is just hold shares in the companies that are going to end up with the money at the end of the bucket. And ultimately, as we exchange this concept of currency for something that's physical, like an experience, which is both, in theory, both imaginary experiences, the economy grows throughout this process. And we've seen people want to re-engage back in living and holiday and travel and buying everything. So we're back.
It's been interesting, I guess, looking back in February last year where the market dropped 35%, I sort of found our portfolios only went 15-20%, which I thought was fantastic for our investment philosophy, that we've sort of been able to capture the downsize a little bit and really not go down with the rest of the market. It was interesting then, I guess, as we sort of progressed, and there was a lot of uncertainty for people going forward, but it feels like people's cash has actually been saved. Where we were all sort of worried about all our dollars and where they were going, I guess restricting us to being at home has allowed us to, I guess, save. And I do find that there's a lot of people now who, I guess, from the younger generation who, I guess, have saved cash and now have good home deposits. Even retirees are sort of saving money, and now they're having freedom to go and do changes to the house. Not that they can find builders at the moment, but it's interesting that I think this cash flow increase that we've got at the moment is keeping us strong at the moment.
It's an interesting environment because you end up with cash sitting at the bank, and cash now earns 0% per annum. And the argument is that cash that earns nothing needs to do something, and that's sort of where it's either being deployed into investment properties, it's being deployed into shares, deployed into renovations, and ultimately the question is, well, perhaps one day will interest rates go back up again? We don't perhaps believe that will be something that happens for at least a few years, and the Reserve Bank has backed that up to say that at present they want to let inflation run hot for a bit, just to prove that everybody who's underemployed perhaps has a job and that the world's going back to normal. But also there's a way that the Australian government benefits from inflation running a little bit. So if the Australian government owes $1 trillion, that's only in current dollars. So if you let inflation boil away for a few years, that's probably only worth $750 billion, still a huge number. But effectively by allowing the amount of currency and prices to grow, then you can effectively repay your debt by increasing the value, by increasing the amount of money in the economy. So we believe that globally there'll be quite a low interest rate policy for many years to come. And we think inflation is going to be hard to see. We're going to find that perhaps in the US it might turn up, but then in places like Japan, where they've had 20 odd years of the forgotten couple of decades, inflation's never really come back. And at the same time, interest rates have never also come back. And that allows asset prices in shares, etc., to continue to grow for quite some years, because ultimately money has to be employed to do something.
I saw, I was looking at an index chart the other day, and there was Australian bonds. It looked like 7.7% over the last 30 years. I guess 7.7% where we're currently sitting at zero. What's really going to happen? Where are we going to find investment opportunities on that defensive side when cash is sitting at zero? What should we be looking at doing, I guess?
So when we think about most of our clients, they sit somewhere between a balanced and a growth investor. And that means around 70%-ish in a circle is in shares, maybe 80% in shares, and around 30% in what's traditionally called bonds or defensive assets. But if that 30-40% sits earning 0%, which is roughly what the Reserve Bank's paying, then that's an unacceptable outcome. So the whole world's going now to search for other investment opportunities that are defensive but generate some return. And now what we're having to go into is some of the high yield market, we're having to go into some of the alternative income market, and I guess employ active, clever strategies that allow clients to still have a defensive portion of their portfolio that can produce some extra security, but still generate enough return that the client's financial retirement is assured, and they're not having to go, wow, I've got a third of my investments sitting earning nothing, which is what the Reserve Bank and bonds are paying. And it's allowing us to really show our clients the skill of what we're able to do to generate excellent returns in all market conditions.
I guess the last year has been interesting. I guess my question to you is probably what's your greatest success story coming out of all this in the last year? What do you think's been the hot topic?
So in terms of my greatest success story in the last year, I lost about 10 kilograms, maybe more. And I'm going to blame that on the Qantas Lounge, weirdly. Flying all the time is probably not good for my waistline. So I'm going to say that personally, being healthy allows me to be there for clients. It allows me to be there for my family. It allows me to be there for our team to help them sort of engage and grow a service delivery program to clients that can ensure their financial security is protected. So that's from a personal point. From a professional point, the greatest achievement this year, I think, that we've seen has been that the resilience of the portfolios we've been invested in the future. And there's a saying that goes that most people are over-invested in the past and under-invested in the future. And what we've seen throughout our clients' portfolios is they've held the Zooms, they've owned the Teslas, they've owned Microsoft, Amazon. All of those stories, we've owned those. And that single-handedly has given us some confidence to say to clients, you know what, we're invested in the future. Come with us, join us on this journey, stay healthy, because there's no point getting to the end and not being healthy at the end of it. But let us guide you safely, securely, to grow your wealth that way. So we'd like to say thank you, I guess, to all of our clients for the last year. It has been a journey for everybody to transform to the new world. We're excited about growing with our clients, preserving their wealth, and then from there helping to enjoy the rewards of what has been excellent investment strategies for the last couple of years. And then I guess we're excited to partner with our clients about what the journey is ahead. And then personally, it's about sort of going back to the three principles, is stay invested, stay fit, and ultimately be around personally to see us.
I think I've really enjoyed connecting with clients in a different form in the last year. It's definitely been interesting to, I guess, connect over the phone and hear the stories of how things are impacting them, hear how things are impacting their family, their friends, because everyone's feeling it a little bit differently. And I think it's important to share our stories to ensure that we can embrace it.
Yeah, I agree.